Hey traders, I wanted to review my trades for this week. Had a pretty good week. I made $1,300 overall. If you remember from last Friday, I didn't put on any new trades for this week. I had 3 trades that I was rolling, so I held off putting on a new trade. But I did decide on Tuesday to open a new trade, and that was in Chewy. And you can see it turned out really well. I was able to close it the next day because Chewy had a nice pop. So you can see I initially got a credit of $550 because I had 10 contracts. I was able to close it for $100, overall profit of $450. Since I closed that one out, I decided to open a new trade in Uber, and we'll look at Uber in a second as to why I got in that one. But that was a nice trade as well. I was able to get out of it today, just a 2-day hold. I initially got a credit of $540. I closed it up for $90 for a $450 profit. And then I also got into Chewy again on the 18th, so yesterday, and it was just a 1-day hold. I sold it, pretty close to the strike price when I initially sold it to get a bigger credit. So I got a $500 credit, closed it today for $100 for a $400 profit. So that gives me my total of $1,300. And then I'm still rolling the 3 positions that I had from last week. So again, if we look at Western Digital, this would be my second time rolling it. So I actually rolled it on the 18th, so yesterday. When I rolled it down to the 44 strike. So here's where this is the actual trade itself, the roll. I rolled it down to the 44. It was at 45 prior, and I still got a small credit of 3 cents. For Citi, I actually rolled it on 6/15. I rolled it on Monday, and I was able to drop it down to the 52 strike. So I went from 53.50 to 52. Got an overall credit of 16 cents. And then lastly, GOOS, I rolled it on the 15th as well. And I rolled it down a strike from 25.50 to 25. And I paid a debit of $100. So I normally don't pay a debit when I roll. I try to always roll for a credit. But I wanted to lower the strike price on this stock because it's not moving a lot. It's not moving back up as quick as I'd like to see it. So I'm going to start trying to get my strike lower and lower so that hopefully in a few weeks, if it hasn't moved any, I can have my strike price back below the stock. So that's why I was willing to go ahead and spend the $100 to roll it down. And the week before, I got a credit of $120 when I rolled it. So really, it's kind of a wash. I basically used that credit that I received the previous week to cover the costs for me rolling down a strike this week. And the reason why I have it as a negative, because in my brokerage app, it will show it as a negative. I'll show you what that looks like in the app. I'm just going to use the desktop app. Normally I would do this in my mobile phone, but since I have the desktop app open, I'm just going to do it here. But let's just go into GOS, and let's just assume that I was wanting to roll this right now. If I right click on it and do create rolling order, so you can see when it rolls, it's going to be to buy back the current week, which is the week expiring next week, the 26th, and it's rolling me into the week after, July 2nd. If I keep it at the 25 strike, I would get a credit of about $400. But let's lower it down to say 24.50. So you can see I'd still be getting a credit of 150. And let's go down to 24. So see, now it gives me a negative sign. It says negative 15, and it now says debit. Before, if we go back and look, it would have said credit, because it means I'm getting paid at that point. But the lower the strike, at some point, you're going to get to where it's going to cost you to roll. So when I'm lowering my strike, that's kind of how I'm determining how far down I roll my strike. Is I want to roll down as far as I can while I'm still getting a credit. But like I said in this example, I went ahead and paid the debit just so I could get it to roll down. So anyway, if you were to execute this trade, you would have to pay $150 because of that minus sign. You would not be getting a credit for that. And like I said, I rarely do it, but on occasion I will if I'm just tired of being in a position. And, again, keep in mind, I've got a lot of credit still to play with. I mean, like I mentioned, the credit from last week covered this debit that I had to pay this time. But, I initially got a credit of 50 cents. So, I mean, if I have to pay 10 cents every week to keep lowering the strike price 50 cents at a time, you know, I'm okay giving up some of my initial credit just to get out of this stock. And hopefully, if I roll this down a few more times, if it means, you know, a couple more weeks, I can, you know, pay a debit if I have to and get the strike lower and be done with it. You know, Citi's one where I've been able to get some really good rolls, where I've been able to lower the strike price by, you know, $1.50 each time and still get a decent credit. You know, if we look at a chart of Citi, these red lines you see here are the lines I drew in where my strike price was. So if I hover over this, you can see this is the 55 strike that I got in on 6.5 and got out on 6.11. So you can just see how I've been able to lower this strike pretty consistently to keep trying to get it back below the stock. So initially, when it dropped below my strike price here, that's when I rolled down. And then you can see I rolled down again when it dropped below. And then now, currently, it's above my strike price. So if Citi holds for next week above the 52 strike, should be good to close this out. If not, then based on the way I've been able to roll this, I should be able to roll this down to probably the 50-50 strike, you know, up in this area next week if I have to. Okay, so in the trade alert I sent out for Uber, I mentioned that one of the reasons I got into this was because of the golden cross that it had a few days ago. So you can see Uber is in a nice uptrend, but what I was looking at was this green line is a 50-day moving average, and the red line is a 200-day moving average. And when the 50 crosses over the 200, it's called the golden cross, and it's a bullish sign. So when I happened to notice that a couple days ago when I was looking at charts, I thought this may be a good opportunity to get an Uber, thinking that it would hold these levels, because you can see it you know, bounced off nicely off of the 50, and it looks like there's, you know, decent support in that area. So really just the combination of it being an uptrend and this golden cross was really what made me look at this trade. And again, you know, I picked a strike price that was pretty close to the stock price when I got in it, and I was okay doing that just because of the technicals. And then again, realizing I could roll it if I needed to. So if I mentioned in, you know, my other videos, if you are interested in getting the trade alerts, just shoot me an email, mark@premiumtrader.com, and I will get you added to it. If you have any questions, let me know. I'm way behind on emails, as I keep saying. There's just so many of them, I haven't had a chance to respond yet. I'm probably going to have to do a video answering some of the questions as opposed to responding to each one individually. I think that'll just take me too long. But, you know, I appreciate the emails. I do read them. If I just don't, you know, like I said, I don't get a chance to always respond to them. So keep sending them to me. I like hearing how you guys are doing and what success you're having. And like I said, I'll try to get to some of the questions I've been regularly getting soon. And I would also appreciate it if you could just like and subscribe. That just helps my video get more exposure. Thanks. I hope you guys have a good weekend.